Will now be recorded.
Hey guys, welcome to Steve Weekly Watch List. So we're looking here at ES, which is the S&P 500, and we can see that we're in this big rising wedge here. We can see it better on the weekly, and we were at the top, couldn't break it to the upside, and we broke down, and now we're hitting that uptrend, kind of breaking it after hours. Let's see, so we had one here, broke down, and then have one here, and if this one breaks down, we're going to be looking at a strong support right here at 27.42. If we break that, then we're possibly going to come back down and hit this 50-day like we did here, and hold that one. We do a monthly squeeze pushing to the upside, so that's a good sign long-term, monthly. So that's still saying that there's momentum to the upside. Weekly though, we're still not looking that bad on the weekly, but the daily is the one that is looking real bad. We got a squeeze firing down. We have this potential down channel here. We are hitting that lower end of that channel and the uptrend of this rising wedge. And we also are forming a falling wedge inside of this downward channel towards the lower end. So if this is a good falling wedge here, then we should pop back up and continue this downtrend channel and come up maybe about 29.40, maybe 29.50 possibly, or even 29.30, I want to say 29.30 to 29.40. That area, if it does bounce up, it should hit 29.30 or 29.40, and then set up possibly to continue down. If we do break this and just keep falling, then we're going to have some support at 28.43. And if we break that and continue down, then we'll have a little bit of support at 28.11. But then the major support is going to be that 27.91. Now we do have a lot of selling volume, and we do have a squeeze firing down. All of our indicators are bearish on the daily. So if this doesn't hold, then chances are we're going to be coming down here. And if this 200-day doesn't hold, then this 27.42 should hold. It's been a very good support many times. So here, and if we come back down to it, we should hold or at least get a nice bounce before we dump lower. So let's check this falling wedge out. So here's this falling wedge. It's getting pretty tight. After hours, it's a little below it, but we should probably get back in it and hold it. If we do break down, then we are going to be going to those targets. Let me get this. All right, so if we do fall down and break this to the downside, then we should be going here, this 28.43 or 28.44. But 288 is pretty good support, so that should hold. This should consolidate in here, and if it does end up breaking this to the upside, then we could pop back up to this 2930 or 2930 area. That's where I would be looking at if we do get a break to the upside. I would be looking at that 2930, 2940 area. Then think about considering loading up on some longer term puts on this area. So if we do able to get a break up, that's the area I'd be looking at. If we break down, definitely be looking at this area and this area. But this one is getting tight here. So that's ES. We have this potential falling wedge here that can, consolidate and then break up either this is going to consolidate some time in the morning and then it'll break up probably an hour in or maybe a little later in the day it'll break up. If it breaks down, then it could just break down before the market opens and continue down if that's the direction that it's going to go. We don't know yet. It's still in this pattern. So falling wedges are usually bullish. Rising wedges are bearish. And on our daily, we're in a rising wedge, but on our hourly for our chart, we're on a falling wedge. So we could be short-term bullish on this massive sell-off that's been happening these past couple days. So we get tight here and we could break up and then set up to break down again. Okay. So let's check out, that was ES, and now let's check out NQ. So NQ, same thing on the weekly, has that rising wedge. We didn't get to the top of it. We didn't get to the top of the rising wedge. It fell before we got to the top of it. And we are at that uptrend and that lower end of this downtrend. On the daily, we have a squeeze that just fired down. But we are at this lower end of this channel. And we're on this uptrend of the rising wedge. So we do have a falling wedge on the 4-hour and the 1 hour. And we could see that, it's inside here as it is low, yes, but we'll see what happens there. Nothing we could do until the market opens. But this should get back inside and, consolidate on it, get tight, and then pop. Whether it's any pop up or pop down, it should pop either way. It's getting pretty tight. If you don't want to play direction and you just want to play the pattern, you could get some strangles or straddles, and you could see if it pops up or if it pops down. So if you want to play NQ or ES, then you would play SPY for ES and then QQQ for NQ. That's if you don't want to do option. That's if you don't want to do futures, and if you want to do options on the indexes. So let's look at QQQ. So here's Q, potential falling tight. We could get a little short covering relief rally because all the guys that shorted it up here, all the big guys that were shorting it here, shorting it, well, they're going to want to take their profits soon. And that's why these patterns form, these falling wedges, because these guys that shorted it up here, even up here, once they get down here, they already made really good money. So then they want to take some profits. they get some profit taking, and then once it gets back up to a point where they started shorting it, or a good pullback, then they'll start shorting it again and potentially fall again, and then break that low and then continue down. So if we do break that low, we have this 74.75.50, and then if that breaks and doesn't hold, then we're going to the 200-day, which is the 7,200, and then that doesn't hold. This should be very good support at 7,100, as we had very good support there with that strong bounce. Got very good support there with that strong bounce. So 7,100, I'd be a buyer of NQ technology. If we get there, I'd be a strong buyer, as the past has shown us every time it hits that area, it pops up hard. Hits that area, it pops up hard. So even if we don't get a hard pop-up like this, and we come down here, we could possibly get a pop-up to 7,800, and then we could potentially, that could be a shoulder, a head, and then this drops down here, and then we could get another shoulder. So that could be a massive head and shoulders pattern, right? Because what would that look like, right? So then we gotta see, what does that look like? So we have one shoulder here, which would be the left shoulder, right at this 7,100 area. So we had that one shoulder, then we made a new high, a higher high. So that would be the head, because the head has to be bigger than the shoulders. So that'd be the head, and then if this drops, and then just continues to drop and then bounces here hard, then we can anticipate that could be a massive head and shoulders on the weekly. So let's look at what that would look like, right? So this is the weekly chart. So that's one shoulder, that's the head, and if we come back down here and then bounce, and then say we get rejected at 7,600 or even 7,800, we could go as high as 8,000, but I don't think of maximum would probably go as probably 7,800, and then we'd come back down, and then we'd break that 7,100, and then drop down to potentially 6,800 and 6,500. Yeah. And that would be right on. Let's go to the weekly. Okay. So this action here, what it's doing here, it could be very, very similar to this action here. So we're getting a sell-off, and then we could get a nice pop up, and then another sell-off, and then a nice pop-up. So here we had 1, 2, 3, 4, 5, 6 days down, and then 3 up, and then a bunch down. Right here we have 1, 2, 3, 4 days down. Not sure if this falling wedge is gonna break up or down, but if it does break up, we could have a couple days like this before another drop. So we could recover some to 77.50, and then drop back down. Just a possibility, because this area here is pretty good support. So that's the only reason I'm considering, is because we have two areas of good support. We have the rising wedge support, and we have a minor support here, which is pretty good support. As we could see, this area here was acting as resistance. This area here was acting as resistance. So then that's gonna be previous resistance when above it is support. So hopefully that support is good and that falling wedge is good, and then it pops up. All right, let's go to QQQ and look at those. QQQ. So QQQ, same thing as NQ, has that rising wedge on the daily, and also the falling wedge on the daily or the hourly. And we go to the hourly. Here's the 4 hour. And that falling wedge is getting tight, super tight in there. It's definitely going to break up or down tomorrow. So we could look at the hourly here. And we can see, you know, after hours, it's a little below. And we'll see if it, you know, continues down or if it gets back in this, consolidates. And then, you know, like I said, it could fire off in the morning or a couple hours into it. But it should get pretty tight that it fires off tomorrow, up or down. Typically these patterns fire up, but we could definitely continue the selling and fire down. So if we do fire down, then we'll go to 182, 181.74 area. If we end up firing up, we could definitely go to as high as 88. If we open up at, you know, 83, 82, and we start to, you know, head up and we break this 84.25, well, that 185.50 is going to be the first target. And if it could get above that and hold it, then that 188 would be my next area of interest. Now, if we break down and we break down this 183, or actually 183.50, pretty much, if we break 183.50, that'd be about right here. So if we break that, we could probably, you know, hedge that we're going down to that 182, 180, 175 area to see if it bounces there and possibly comes back up. But if not, breaks that, then we know that we're going lower and lower and lower. All right, so let's look at SPY now. So SPY, same thing as ES. Our hourly falling wedge. We're still inside that falling wedge. We could definitely consolidate, go sideways or up and down, and then fire off, whether that's going to be up or down. If we fire off up, we're going to test that 291, and if that one holds, we could definitely get to that 293. And that's going to be an area where I would be cautious and take profits. As you can see here, that was some major resistance on that 293. If it does get above 293, my next area of interest would be 294, as that's pretty good resistance here. So 294 would be good resistance. 293 is going to be, if it pops up, that's going to be my profit zone. I'd be taking profits there. If we break down, we're going to be headed to 285.87, and if we don't hold that 285, then we will be going. If we don't hold that 285, then we will be going to 282 and then come back to the 200-day, see if that holds, and if that doesn't hold, then 272.42 is going to be a good area of support. If I extend this to the left, we could see that it was resistance there, it got above, and pushed up, came back, pushed up from that level, then came all the way back almost to it, and then rallied back up. So if we lose that, definitely if we lose the 200-day, this is going to be the area where you would be considering buying up on a bounce. And that could be a possible head and shoulders as well. So this could be the shoulder, this could be the head. Here, let me zoom in here. So here's the shoulder right here, right at that 270, 250 area. So there's the left shoulder, then we made a new high, right? We made that head, and then we could sell off, and we could continue this sell off and sell off down to the 270, 250, and then bounce back up to 291, right? That'd be a 20-point move. So if we drop down to 270, 250, we could definitely rally back up to 291. 291 would be a good area to rally back up to, and then rally back down, fall, break that 272. And if we do break that 272, then we would be going, our first target would be 262, and then our next target would be 243.50. And 243.50, let me see if that lines up. 246. So that's where we might be going. If we break this 272, we could definitely go to like that. If the sell-off of the head and shoulders breaks down, yeah, I mean, that's not going to be for a while, as that right shoulder needs to build. But if it did, then we'd be going to that 250 area. This probably be 250, 250, probably even more, probably 255 or 53 by the time that head and shoulders wants to break. But you can see that potential, that left shoulder here, the head, and then we could sell off here and then bounce to 291, make that right shoulder, and then sell off and then break down. So keep that in mind, because when you're in a rising wedge, first thing you want it to do is break out. So break the path it's in. So break this down, right? If we break this down, okay, we know that it's going to go to next major support. And where's that next major support? 272.40 or 272.50 basically. So 272.50, it has a major support there, and it has a 100-day moving average there on the weekly. Okay, then we could bounce there, go back up to 291, and then come back down. And when we break down here and then we come back to 291, that's going to be a back test also to the breakdown, because if we sell off and then bounce back to 291, we're going to come back and possibly, you know, get near that line again, reject it, and then that's where you want to get in. When you see the rejection, that's when you want to get in and get prepared to come back down and break this down and then head down to 240 or 250. And that would be that possible head and shoulders there and that rising wedge breakdown. So keep in mind that we still have this short-term bullish pattern, which is the falling wedge, that can break up, and we can definitely break up back to 293 before we fall back down. Generally speaking, SPY after hours, it's below this uptrend. So unless it can really fire off this to the upside and get back above this trend line and actually close above 293, then it could still have a possibility to head higher. But if it doesn't, and we do close beneath this, then you know, chances are that we're going to be building this head and shoulders, and we're gonna be headed to this 272.50 area in the next month or so, possibly by this month. And then we'll get a bounce up maybe in September or end of August, possibly, right? Or we'll see what the news brings, right? All right, so SPY, QQQ, NQ, and then I wanted to look at, so look at Amazon for you guys, because everybody always likes Amazon. So Amazon had this nice bullish uptrending channel here. It did break it. It broke it a few days ago, and it tried to hold the weekly support here on Friday, and it actually did hold. But then after hours, of course, because the whole market's down right now, after beneath that, it's beneath that, but it's still holding this downtrending channel. So let me go to the 4-hour so you can see it better. So this is a downtrending channel on the 4-hour chart, and it looks like it's been respecting it pretty well. So if this is hitting the lower end of that downward channel, we could definitely pop up tomorrow on Amazon and maybe even back test that 1820. And if it fails to get above there, then you want to get puts down to 1750, right? And that's going to be the 200-day moving average on the daily. So 1750 is going to be a good target. You know, if we get up back up to this 1820 and it rejects, you know, you want to get those 1750 puts because that's essentially where price is going to be attracted to. And we could look on the daily to see that 1750.44 is that 200-day moving average. So we gap down, then we push up to 1820 and then we get rejected there. That's your cue to get that 1750 put, and or even longer. If you want to get longer dated Amazon puts, then you know, we could definitely fall back to this support here at 1700 or 1695. Definitely fall back down there to 1695. Amazon's little head and shoulders doesn't look as clean as SPYs and Qs. Looking at the weekly chart, doesn't look as clean. So instead of coming back down to this support, Amazon didn't even get near it. It was short by 50 points. So that's not a good head and shoulders pattern. Now, if Amazon comes to 1755 and holds 1755 and bounces up and then comes back to say 1900 and then forms a shoulder, then that would be a good head and shoulders. It'd be a smaller head and shoulders than NQ, QQQ, SPY, and ES. It'd be a lot shorter, but it would still be a head and shoulders as this left shoulder, then the head, and then if we hold that 1755 or 1770 area, if we hold that just like this one did, and then we bounce up and then come to 1900, get rejected and then fall back down. If we fall down, 1625 is coming for sure, and that could be good support because there's a lot of consolidation right there at that 1624.67. So keep your eye on that number. Keep an eye on 1750, 1777 for a bounce on Amazon to create that right shoulder. If it does, great. If it doesn't, 1625 is the number that you want to be in. Keep in mind, especially if this 1750 loses, that's additional 100-point drop. If 1750 is lost, then you know where we're going, 1625, and that should be good support there. Okay, and you can see here on the weekly chart that we had that nice bullish uptrend, and we broke it last week, and we might get some continuation, or we might get a bear flag and then drop. But I think still has more room to drop, 1750 at least, and 1625 possibly. Okay. All right, so that was Amazon, and then TWLO. TWLO broke down from a it's on the daily, from a rising ascending triangle. So here we had an ascending triangle, and ascending triangles are typically bullish, but this one had a fake breakout to the upside, and then it sold off hard to the downside. It's at the first target. As you can see, this support here, this is holding that there. After hours, I could double check. Okay, so we're below that, but we're still holding this area of support. So we could still push up, but if and we just continue down, 124.30 is a good area to either take profits or play a bounce. And that is because if I extend this to the left, right, we have resistance here, which above it is support. So here, like here, so this was resistance, got above it, okay, came back, touched it, support, came back, touched it, got under it, and then got back over it, and then held it, pushed up, touched it again, pushed up, touched it again, pushed up. Okay, so then we're going to come down, we're going to touch it, just like all these other times that we touched it several times, and there's going to be a possible bounce. Even if it falls lower and goes to this 114 or 115, it's going to bounce and then set up and then fall. All right, so that's TWLO. Then you go to the hourly, and TWLO's falling wedge wasn't really, yeah, wasn't really working out. All right, let's see. Let's go back to the daily chart. So TWLO, essentially, if it breaks down and loses that, that's the area that I would be looking at. It has a squeeze to the downside that hasn't fired yet, so this still has room to go down. It will go down. It's just, will it lose this support tomorrow, which it's already lost that support after hours? Well, will it continue to lose that support and not recover, right? So if we do have falling wedges across all the indexes right now on the hourly, saying that it's a possibility that's going to fire up. Well, then TWLO could come back and test, since it's already gapped down, it's probably going to test this 135. And if it comes back and tests this 135 and fails to get over it, then that's your green light to head down to 124.30, because it's any setup and then fire down to that 124, maybe even exceed it a little bit, maybe to about 121 or 123, and then maybe bounce and then set up another one to push down to this 115. All right, so that's TWLO. Now let's look at crude oil. So crude oil, let me go to the weekly chart. So this weekly chart, we have a symmetrical triangle, and symmetrical triangles are 50-50. So we have this uptrend and we have this downtrend, and it's creating a symmetrical triangle, and it's getting super tight. It's getting really tight. It's getting really tight in here. Still has, you know, some room, but it's getting tight. It's gonna break up or down within the next week or so. Okay. On the daily chart, we did have this head and shoulders. So we had one shoulder, the head, and then the next shoulder, and we actually broke it down. So this was the neckline, 56, and we broke down with the big candle down, and now we're setting up, you know, possible bear flag to either break this down, or this can recover back over this neckline. If it gets back over this 56.07 neckline, or actually better yet, this 50-day moving average at 56.29, if it gets over that, that's a good sign that we could, you know, potentially head back up here and then, you know, chop around a little bit more for the next couple of weeks before it decides to make its decision. Now, if we get to this 56 or 56.30 and it rejects and pushes back down, then that's our go signal that this is going to possibly break down to 50. And 50, well, 51 is a good area of support. Here you can see that we had a double bottom and we rallied up. Extend that to the left. And we can see that there's very good support at that 51 area. Several bounces at that area. Several nice bounces. So if we do break down and we push down to this 51, that's going to be an area of interest that you would want to look into buying if you would see a reversal. But this can definitely chop still. I posted in the group that this could be a good long straddle or strangle, right? Because if it breaks up, you're going to 60 plus. If it breaks down, you're going to 50, right? So right now you're at 55. So you're going to have a $5 move up or down. You just need to see what time it's going to happen. It's going to happen within the next 2 weeks. But within those next 2 weeks, I don't know when it's going to happen, but within that time, it should happen. We shouldn't consolidate. I mean, we can essentially consolidate the next 2 weeks, but that would be the max. So maximum 3 weeks before this breaks out. But I would say 2. I'd say in the next 2 weeks, we're going to have a big breakout or breakdown on oil. And I'm kind of mixed because I see this head and shoulders that fired and this bear flag that's setting up. But, you know, we're in this symmetrical triangle on the weekly. We have more room to the upside than to the downside. So if this breaks down, you know, we should be breaking down, you know, heading into the 40s. Especially with the symmetrical triangle. The symmetrical triangle breakdowns and breakouts, they're very violent, and they make big moves. So I think this maybe could chop up a little bit and hold a little bit longer before it makes its decision. And I've been looking at XOM. Let me see something really quick. Yeah, okay, XOM. So XOM, if we go to the monthly chart, we could see that we've been holding this 7160 level for a very long time. So held over here, held here, held here, held here, held here, held here, and we're currently at it right now. And here we've been descending, right, making lower lows, lower highs, the same pretty much lows right here at 7160. So we know that's good support. Now, is that support exhausted? Are we going to break down? If we do break down, you know, where are we going? We're going to 67 and then essentially 55 or 57. So 67, then 57. Those would be the areas I would be looking at on the downside. So let's look at the daily here. We can see that we lost this uptrend, and currently we were trying to hold that 71.65. It held it Friday, but I'm sure after hours it's below that. And yeah, after hours it's below that, about 50 cents below. It could definitely come up and recover that. And let's see. So not a falling wedge, more of a channel, downward channel. So downward channel definitely, and it's in the middle, so it could definitely keep going down. Or if it does come up, it should reject that 71.67, and if it does reject that, then that would be your go sign that it's going to 67. If it reclaims that 71.60, then that's very bullish, because we're going to be breaking the downtrend as well, and possibly pushing up. So I would watch oil. In the within the next 2 weeks, 2.5 weeks, there's going to be a big breakout to the upside or downside. So going back to the week, or maybe it's the monthly. Yeah, the monthly. So there's a huge squeeze on it, huge squeeze. And that squeeze is having downward pressure. So it can definitely break down to 67, then 57. It's below the 200-day moving average on the monthly chart, which is not good. It's below all this moving averages on the weekly chart, which is not good. And it's below the daily chart, not good. So below 71.67, it's not good for Exxon. Can go down to 67 and then 57. So keep that in mind on oil. Guess I could look at Disney. So Disney got up here to the 147, made a new high, but then broke down. And you could see here, so I thought that we were in this megaphone pattern. We broke that here, but now after this, right, it looks like we have a possible shoulder and then the head. And then if we come up on Disney here and get rejected at 144.30 and come back down, then we could have another shoulder, head, and shoulder that could fire down. And that would mimic the entire market. So we're having this type of pattern across. It can definitely, so say earnings are good, right? And earnings are on 8/6, so Tuesday. So Tuesday, so tomorrow, if earnings are good and this pops up, right, and it goes to 144 and it gets rejected, that's your cue to get puts to 140 and lower. Because if this pops up, gets rejected there, it's going to reject this uptrend line and it's going to reject this daily support. And it's going to reject pretty much the left shoulder area. So I would be looking at rejection here. If it gets above and holds that, then that's strong and it could continue up. If it of 47.15, that's even stronger because it cancels the head and shoulders and it could continue higher. But if it doesn't, if Disney does good and it only gets to 144 and it gets rejected, or even if it gets up here to 146 or even 46.50, but then sells off below 144, then that's still good for the head and shoulders because it never broke this high. As long as it doesn't break this high, head and shoulders still in play. So if this holds here, if this 139.85 holds and pushes, then that's a good sign. But if it rejects here, then that's a bad sign. That's telling us that this head and shoulders is doing it's working itself out. So let's look at Disney after hours, see how much it gapped below. So it did gap, but it's still holding that 140. So it's still good that it could fire up, but it is firing a squeeze to the downside on the hourly. So as long as that 139.85 does break, we could probably see that go higher. But as I said, watch for that 144.30 rejection. And then if we do break down, say this does form a head and shoulders, then we'd be essentially breaking down, filling this gap here at 135, 135.70 to 135.72, and then filling this gap here at 132.55, and that would probably be a good area to buy because it'd be at 100-day moving average, filling these gaps. And it's pretty good support right here. Yeah, there's a lot of consolidation right here. A lot of consolidation right at this 132.50. So that 132.50 if that head and shoulders forms and fires, then that 132.50 would be a major buying opportunity and target. So we would have 135.72 and then 132.50. All right. So let's go double check and see how our ES is doing. Okay, so here's that falling wedge, and I said that we were below it, but as you can see now, we're back inside of it. So this falling wedge is in still good shape. So as long as it, consolidates in here, we have a good possibility of firing up. And here, I would be looking at 29.30 and 29.40. So those are my two areas of interest. Like if we fire up, we break above 2900 or 29.10, definitely going to go for 29.30. That's a given. Now 29.40, we could do it, but doesn't have to. But we could definitely do it. Push it to 29.40, and then that's the area that I would be looking at possibly getting into some longer term puts. The hedge, especially as a hedge, because there's been so much downward pressure. But we are at this lower end here of that support and this support. So if we get back above and we get that 29.30, that's going to be initial resistance. But if we get above it, 29.40, that's going to be our next area of resistance. 29.50 max, that's going to be our area of resistance there. And then that should set up a nice bear flag to break this to the downside if it's going to go to the downside. This comes back up and makes a new high, then it's still creating this rising wedge pattern. It's not ready to break out, but we are already 2/3 the way of this rising wedge or even more, so it could break down now. And like I said, if this is going to be a head and shoulders, which it looks like it's going to be that on the weekly, then it can definitely continue to sell off until here. So we saw on the hourly, it was recovering some. Okay, so now let's look at NQ. I'm sure it's also recovering. So NQ is also recovering some. So it's still inside. It's still inside that falling wedge, and it's still holding that minor support of 75.7426. So it should break up, push to 777 or 7800 area, and then that's where I would be thinking about getting short again. After it breaks up to about 77.80, 77.80, probably a good target. And on QQQ, that would be 188. And then I'd be looking for more downside. All right, guys. Well, I hope you guys found this valuable and useful, and I hope you use it to make some money. But again, if this, falling wedge doesn't break to the upside, it breaks to the downside, and we're gonna go. If you want to play it safe, what you do is you just get a strangle, to the upside and to the downside, or you just get a straddle, same put, same call, and then play it and just let it fall or let it run up, and one should take care of the other, and you should get paid. All right, guys. If you like the thumbs up, appreciate any feedback, and let's kill it this week. Signing off.